Does the BLS need to change the way they calculate the job numbers? While we know the labor market has been softening, I gotta say I was quite surprised to see annual revisions to non-farm payrolls data for the year prior to March 2025 showed a drop of 911,000 from the initial estimate. This is a huge change considering the average pace of seasonally adjusted employment gains went from 147,000 jobs a month over the period to a bit over 70,000. This means instead of adding about 1.8 million positions as originally reported, the US economy created just 847,000 jobs. It also marked the largest preliminary revision on record going back to 2000, and when looking at it as a percent of total jobs lost, the revision represents the largest since 2009. To be clear, while this is troubling, this is not the final revision, and it is just the preliminary part of an annual process in which the BLS updates the job figures from its monthly employer survey using more comprehensive data from state unemployment tax records. The official revision will come in February, and large changes can still occur. As an example, last year's August revision of negative 818,000 was revised to a final reading of negative 598,000 in February of this year. With how much technology has changed, I would expect these monthly reports would get more accurate over time, not less. Maybe instead of relying on a survey of about 121,000 employers, there's a better way to get this data. The BLS pointed out that the revisions were so large because businesses within its survey reported higher employment in its survey than they did in their quarterly tax reports, and that businesses that responded to a survey had stronger employment than those that had been selected for the survey but didn't respond. While this all may seem extremely troubling, I have continued to question how payroll gains could be so large without a good pool of people to fill those jobs. I still believe that though the labor market has softened more than we initially thought, I think the economy is still in an alright spot considering the unemployment rate remains historically low. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for latest economic news, expert analysis, and market insights.